No audio though. Are we live? I love it when we go live and the audio's not playing. It's like my favorite thing that we do. Yeah. Cody, how you doing, brother?
I'm doing fantastic. I could have swore I clicked the audio there, but I guess not. It's okay.
C'est la vie, brother. Hey, it's the market. It's 3/14/2019. We've got Coach Noah, Coach Cody, and Coach Tim here. Tackle Trading's halftime report. Let's get right down to business. And Noah, how are you doing?
Well, the answer to that is always fantastic.
Well, we were talking before the show, and Cody made my day. Put it on Twitter today. Monty Python put out The Holy Grail on Netflix. I was watching it this morning while I was trading. Highly recommend.
Oh, yeah. If you want a good laugh. I just love his humor, too. It's just...
What is the airspeed velocity of a laden swallow in flight?
We're talking about weight distribution here.
An African swallow could have done it. Yes, but they're not migratory birds.
Oh, the life of a trader. It's a tough life when you do it right. I get it. Anyway, let's get right down to business. Let's have Noah, why don't you bring your charts up, and then we're going to rock. When we get into the theta discussion, I'm going to have Cody bring up the tackle theta research and do that. We've got a little prep here today. Cody, kind of set up our highlight that we're going to be heading into later in the show.
So the highlight that we're going to be going into later on the show is that we're going to first show you guys how to work with the spreadsheet, where to get it from the website. After that, we're then going to build out two different condors debating on the stocks. We've been going back and forth. I think Amazon's going to be one of them, maybe Caterpillar, or IBM is another. And we're going to build out those and just kind of compare the two to see which might be a better condor.
It is. I just saw this. It's 3/14, so that's National Pi Day. That's why I keep seeing all the pie stuff all over the place.
That's exactly. Yep. Pi for the nerds. Which pi is one of the mathematical things that we don't even need at all in trading. Period. It means nothing to traders.
Except for you can have pie on Pi Day.
There you go. National. Yeah, I do like that. Noah, the market's failing to break out here. We're stalling at resistance. We've seen some strength across certain sectors and industries, but today is literally a doji day. Light range candle, not a lot going on. Help us understand the technicals when we see a light day like this. How do you use that? What information do you get from that? Walk us through the chart here.
Well, with yesterday's big green candle, I thought we had some good momentum into that resistance zone with a chance to break out. Today's doji leaves a little bit to be desired for the bulls, taking a breath before it breaks out. So it's kind of hit that resistance zone, and markets become a little bit tentative. And so, we've got that. We've been talking about that 2820 ballpark price zone. And if you take that down intraday, Tim, the thing I was pointing out this morning in the lounge we were talking about is we talked about that resistance zone and the big macro forming cup and handle. If we dial that in intraday and look at it, we'll see another cup and handle type formation where there it is. I'm on a 1 hour chart. You can see the price hitting that zone, and it's already trying to break out, but we're seeing just a little pullback here. And if it comes down any deeper, you'll see a little cup and handle type scenario form. So it's just right there knocking on the door, just needs to get out above that high. And I think once it takes out the high, you might see the traders emboldened a bit. But otherwise, it's just knocking at the gate, and there's not a lot of activity. Volume has been pretty typical, nothing spectacular. So I think it's taking a breather, and it just needs a little encouragement. So, maybe some positive words like, you can do it, S&P, we believe in you. It can get there.
You really think positive affirmations are going to make the market break out?
Hey, you're talking to a guy who's built a sacrificial altar in his backyard to appease the market gods.
Hey, listen, on my computer, I have a thing that says, hello, handsome, for a reason. Yes. I believe in positive affirmations. I mean, if we all just think it, hopefully that is mass psychology in a chart, I guess, but we will have to click buy.
You just got to get the announcers on CNBC to just say the markets are going up, and no one will even look at the chart, and they'll just start buying stuff, and then it will go up.
It's do the positive thoughts lead to positive buying actions. If you get that, the market will break out.
I like it. One of the components of every index, so we could talk about it as we go through all of them, is Apple Computer. Apple continues to outperform the market here. Positive analyst guidance. A lot of questions about it. I love the company, obviously. Big believer in the product and all that. Noah, give us a read on the chart.
That is a really nice looking breakout that looks like it's slowing down. When you get a nice breakout like that and you notice the candles continuing to rise, but you also notice the candle shrinking and the distance between the tops of the candle slowing down, that has got the looks of an overextended slowdown that probably reverses. Short term, not a big reversal, just enough to see some profit taking. So you see it inching up. If you were to take that intraday and look at that under the chart, there you can see the slowing momentum pattern, the slowdown on the top, and the general, kind of change in the angle of the price action. So it is slowing down a little bit. Doesn't mean it can't go higher, but that's a really typical pattern you'll see on a chart near tops. And I think it's coming into, you got a resistance zone from the past. So kind of a price threshold out there that people are eyeballing. And I would also say you might be considered, pay a range up. If you look at some of the previous swing cycles and you compare those, the expectancy, I think traders at this point in time would be looking to take a profit, but it hasn't turned yet.
I was talking to a trader this morning about the difference between primary and secondary rules. And I believe they actually had you and Master Trader, Noah, and they had learned a lot about breakouts and all that kind of stuff. And they're trying to pin down their rules. And they had a rule in their playbook, in their personal playbook, that said, I won't buy a breakout unless it has increasing momentum. I said, well, hold on, slow down. I don't think that's what you were trained on. You can buy any breakout if the pattern's right. Okay,
right. Yeah.
On high volume. And there's a difference between having a primary rule, which is like this must happen for me to trade. For example, it's got to clear the high, 10% of the ATR above the high for me to buy. That would be a rule. And a secondary rule, which is kind of more subjective and has some gray area. Talk a little bit about momentum and the idea of primary versus secondary rules, because I know you teach that in Master Trader.
You bet. First, I would say breakouts don't require momentum. I like the momentum on the pullbacks. Momentum is just it's just a rate of change over time. That's all you're really looking at. And a primary rule, that would be a chart. Technical patterns and things are what I would put into the category of trade identification. And if I've got certain qualities I'm looking for in a chart, I can run those through a scanner or a filter and narrow things out that way. And I'm just looking for the chart pattern. I would consider those, again, chart identification, trade identification. My primary rules for me always come down to those more important aspects of trading, which are entry conditions, position sizing criteria. It's really easy to look at a chart and to talk yourself into a trade if you like the conditions on the chart. Having a good set of rules, I think, and having them written down and a little checklist for you to go through, I think keeps people from falling prey to their own bias and falling in love with the chart and talking themselves into the trade by massaging the data. But if you've got some good hard rules written down, you can cross-reference against, and then you can change those rules over time. But while you're looking at trades and placing trades, you stick with your existing rules. Secondary rules versus primary rules. Primaries have just got to be your must-haves. I would say your secondary rules would be nice-to-haves.
Yeah, the secondary rules qualify the strength of whether something's an A+ or an A-, but the primary rules have to be there for you to trade at all, right?
Yep.
I mean, that's kind of the way I think of it. I love the answer there. Let's move on to Facebook. We have to talk Facebook today. NASDAQ component, obviously an S&P 500 component, one of the FANG stocks. What's going on with Facebook? I mean, it seemed like the site was down all day yesterday. I don't know if that was a data breach or something wrong with it. An app and a company this size should not be down for a full day. That seems strange to me. I saw that across the globe. Cody, what happened with Facebook?
I saw news about it on Twitter.
Yeah.
Yeah. Twitter was having a field day with the fact that Facebook and Instagram were down. I still haven't actually seen the exact reasons why. Someone in the chat might know, but no, I haven't seen it on why it was down. I was enjoying the laughter that Twitter was having, though.
Well, I did see the New York Times came out and said there's an investigation into the legality of some of their data.
Why would that cause them to be down, though?
I don't know. I don't know if
because I saw that same headline.
Yeah.
They had to shut it down to shred things. I don't know. Who knows?
They just started.
Burner.
Price obviously gapped down a little bit, though. I mean, I don't know if that's directly related to it. I don't think it's the type of event that would harm the stock price too much. Short-term reaction, a little bit of a gap. I think it's trying to break through that 170, 250 zone.
Mhm.
I see we were talking about this morning. You had a nice pop in the momentum on earnings, and it's just kind of formed this little box, stock in a box. And I see, the kind of the cup and handle in there, the ascending type triangle type forming. It just keeps knocking on that 172.50 zone, and it hasn't broken out yet, but the lows are getting higher. So if we see another higher low here and another candle approaching resistance, I think you'll get that breakout.
Yeah, maybe. And if you do see a breakout, there is a buying opportunity there from a swing trading and trend trading perspective. There's no question about it. Obviously, a little gap down. This is not a catastrophic gap. We're talking about a couple of percentage points on some news that can easily be digested. I'll tell you, they've had tons of negative news, and people seem to want to hold that trend right now. So it's going to be a fascinating one as it approaches that resistance and breaks out to see how we interpret that. We'll get back to that as it happens. Move on to DG, one of the companies that had earnings today and actually gapped down on that earnings. If I'm looking at it, there's a gap, there's a gap fill, there's catastrophic gaps, there's all kinds of gaps. This one was a 7.7% gap down, and it's now finding itself into some moving averages, potentially a bull put entry on stuff like this. I know it's a more advanced entry, and you should only do it if you have that built into your rules and whatnot. How do you interpret DG here on this gap down on earnings, Noah?
Well, let's see. How bad was that? The miss wasn't too bad. I mean, they missed it by 4 or 5 cents. The guidance is probably a huge part of that. And then again, disappointment around earnings. You get a knee-jerk reaction. Lots of inventory comes into the market overnight, and so you see the gap down. It's still above the 200-period moving average, and there's plenty of support zones down there. After a gap like that, I basically watch the high and the low for the day, the first part of the day, and those become kind of the gap line in the sand.
Mm-hmm.
And here you can see it. I've got it down on a hourly chart. And again, from the open, you've got a gap line around 112.89, 113 in that ballpark.
And actually, keep going.
And then the low down at 108. So those become my two lines in the sand. So that's the market open, that's the low, and that's what I would be looking for. That's overnight activity over there. If I'm going to trade the gap, I'm going to wait for it to cross above the high it established for the day.
Mm-hmm.
And a lot of traders like to shoot the gap. Basically, the expectation is that the market overreacted to the news. A little bit too much volume and inventory came in, prices dropped, and it creates a buying opportunity at the new discounted price. If you liked it, if traders liked it before at 117 and they were willing to own it, maybe they'll like it even more down here at 110. It's got a long lower shadow, so that tells me that there has been some demand after the little gap down. And when it comes to trading gaps, some traders look at it as a kind of a swing trading opportunity. Is it going to fill the gap or is it going to run? I think with the rising 200 period moving average and the support resistance zone, I will not be surprised to see that attempt to fill a gap. Got a similar gap back over here.
You got a really interesting pattern intraday now that I look at that. You got a W pattern on the 5-minute chart developing into a fill back. And this is where multiple time frame analysis can come into play when you're looking at stuff. Obviously, when you look at a big gap, it's harder to see it. But now you break it down into a shorter time frame, Noah. I'm seeing action there. I see some potential pivot point relationships. I do like the way those pivots are developing on the intraday.
That kind of stuff is what makes me want to day trade from time to time. I'm not typically a day trader. It's not what I sit and do. Mm-hmm. But every once in a while I get a hankering for day trading.
Mm-hmm.
And if I see a pattern like that, it might just seduce me into day trading, trying to catch that late day, break out there. Mm-hmm. So that's a good looking W. There you go.
Yeah. I don't mean to entice you there into a trading style that is not your favorite. So I don't want to tempt you. I mean, Cody, I don't know.
It's really, Tim, the problem is that it used to be my favorite, and I had to enter a 12-step program to get off of this stuff. And the first step is to recognize you have a problem, and I was having a day trading problem. It was affecting my lifestyle. I was way too sedentary.
Was the problem that your account was going down, not up?
No, I was pretty good at it. That was an initial problem. But once you get over that hump, you learn to get your account going the right way. No, it just came down to time. Sitting in front of my computer all day.
Oh, yeah. It just eats away at your time.
Yeah, absolutely.
So you're supposed to have a life outside of these computers? Is that what you're saying?
Yes.
I'm in trouble here. Welcome out, halftime
y'all
crew.
Aren't just two people that live in my screen every day. Y'all are real people.
We are now the talking heads for sure. I'll tell you.
One thing real quick on DG, if you can go back to the daily chart, I just want to point out just a quick, easy lesson is that this thing looked like it was going to be breaking 120 as a potential high base breakout. And that's exactly why you always have to look for earnings. This is a perfect example of just a quick, easy lesson that it did technically break yesterday before then gapping down today. You have to always watch for earnings. Make sure you know when that is, because that technical break right there would have been tradable had it not been for earnings this morning.
100%. And speaking of which, there are 4 S&P 500 components that have earnings tonight, Noah, and these are big companies. Just rapid fire through all of them. Adobe, ADBE, earnings tonight, And again, you can't take the previous technical pattern as any indicator of what earnings is going to do. We saw DG was up at a high, it gapped down. Adobe could do whatever it wants to do on earnings, right? Oracle, earnings tonight.
Yep, I make the joke often. Unless you're Martha Stewart, you don't know what's coming down the pipeline on earnings.
That's true. I've never heard it, but I do like it.
I can't believe you've never heard me use that one before. I've used that one all the time.
Oh, that's good. AVGO, Broadcom.
What's Broadcom symbol again?
AVGO, AVGO, biggest company out of Singapore, $110 billion company, earnings tonight. And then Ulta, one of your favorites, Noah. Guys, you've got to check your earnings. And I want somebody in the chat to type in Vega Systems. In the halftime report, we really just do our daily routine, and we talk about markets and what's happening, and we look at charts and we break things down. But you have to develop systems, and there's a lot of great systems around earnings, Noah. I would call them intermediate to advanced, and they're not for brand new beginners. What kind of Vega systems do you like, by the way?
I do a lot of short strangles around earnings. I do some butterflies around earnings. I also, prior to earnings, I do volatility plays for the increase in volatility leading up into earnings, straddles and double diagonals and things of that nature. But for the volatility crush, short strangles and butterflies.
The old SS and the butterflies. I was talking to a couple of students, halftime crew loyal students here. They're probably here today. I won't mention the names, but they were saying that they finally found their edge through trading earnings and volatility strategies. And I thought that was really cool, and there's a lot of different ways you can do this. Day trading, swing trading, position trading, theta, delta, vega, gamma, you name it. The world is your oyster, guys. And you've got to find that edge over time through trading. Earnings is something that I've seen in the past. With some traders, it ends up becoming their big thing that they end up perfecting. A lot of earnings companies here today, but then the earnings season gets pretty light. We're going to be moving into positive volatility environments. Top 5 gainers on the NASDAQ here today. I got to mention it. GE is up. GE is up.
Does that make you happy?
I don't care. I do care, but I so much news, so much noise, so much garbage. This company, literally, they came out and said they're going to have 2019 as a reset year. The executives came out and said how they're going to lose all this money, but they painted a picture to where they're going to turn it around in 2020. Everything's going to be fine in 2029. I have no idea when GE is actually going to come back. I was looking for a short under 9, Noah. It never confirmed. It's now moving into a neutral range. I know my view. I'm biased. Everybody here knows I'm biased. What's the chart tell you?
That Tim's bias has reason. That's what it tells me. Tim's bias is probably well informed.
Yeah.
Even though it's running up right now, I don't trust that rally. I would be watching for reversal signals, and I think there is an opportunity to take the short on that, particularly, again, if their plan is to lose a bunch of money, it's going to get darker before it gets brighter. It's going to,
if that's their plan, they're pretty good at it.
Yeah.
They've been doing a great job.
I believe that 200 period moving average is going to take the stock out behind the woodshed and give it a severe beating. That's what I believe.
I think so. I mean, you look at that long-term weekly trend, and this is where multiple time frame analysis is almost just mandatory if you're going to be a good trader, in my opinion. You go back to the weekly chart, Noah, and you can see it. The daily chart gives you a lot of noise right now because the news literally every day is just back and forth about whether or not investors want to buy or sell. It's a heavily shorted company, and you can see the downtrend, the precipitous downtrend. To me, it's still ugly, but maybe I'm wrong. Maybe they make a comeback. If it broke out of the pivot high, I would be open-minded enough to change my opinion in the short term, but not until then. I'm holding my primary bias as long as the long-term trends hold. That's my take. Lam Research is running here today. LRCX up at about 176, coming off of a deeper retracement, old resistance, new support, actually a little kiss hello pattern at 160, Noah. That was beautiful. Now we're running towards the high. If you bought that dip down there on that green candle, say 4 or 5 days ago, and now you're looking at it again, can you scale up and actually buy more into profitable scenarios if it broke out of the high up here?
Well, I think that that's probably one of the easiest times to buy is when you're already ahead. So adding to a position, I think is really smart. In fact, scaling in is really wise. And the first person who taught me that was a professional poker player. The kind of person who could go in and count cards and win consistently. But the way that they managed their money was, they took the gambling part of the equation out of their poker playing, and they talked about trading a lot the same way. Say, look, when you're new into a trade, that's when you're first getting dealt your hand. If you get dealt a good hand, you can raise, you can add to the position, but you start out small. You always start out with the smallest amount of risk at first, and then add to the position as it grows. So I like that, Tim. The way it's breaking, the way it's moving, closing near the high. If it can clear that, a 180 zone, I have no problem adding to a position like that.
Well, and if you, and I mentioned something pretty quickly, I want to highlight it here real quick. At the beginning of December, it put a doji pivot point in at about 160. It then broke out on earnings early in January, mid-January, and ran and hit a new high. There's a pattern we call a kiss hello, which on the big picture, this was a kiss hello, right? It ran, it broke out, it came back, and it kiss hello. Talk about why that pattern is psychologically important.
Well, it's that we'll take that little price threshold right there and run that across. And it broke above that, establishing the reversal in the trend. Prior to that, you had a stock that was getting discounted down to and looking for that demand zone. And it found it down in that 140 price zone. And it had enough accumulation that the demand continued to increase. And you saw prices break out to a new high. After it comes back down to retest that zone, we love that kiss hello setup because that's really a strong establishment of a reversal of trend. And the upside potential on that kiss hello can be really pretty solid. This had a lot of momentum, on that breakout. The pullback down into support coincided with the market correction, and it's just a good technical setup now from that perspective, and it's getting that upward confirmation. And in theory, it's the kiss hello is part of those cycles and patterns where it does establish that new trend. You do expect another trend move out of that. So if it's got the fundamentals to back it, the chart pattern, it pays a killer dividend. This I can see where this is a stock that investors would be interested in buying and traders would be interested in buying it up.
A lot of mixed action across the market. The heat map is literally beautiful to me because it's like a Christmas tree. You've got green, you've got red, you've got maroon, you've got everywhere in between as well. It's all over the place. It's a stock picker's market today, and it's been that way for a while. I'll give you a couple of companies that are pressing the lows here on the S&P 500. Alcoa, one of the biggest basic material companies in the world, and actually now hitting near support. It's not a breakdown yet, but that's weakness, Noah. There's no question about it. Materials are under pressure here today as well. Quickly move on to LB Brands as well. And these retail names, man, I'll tell you, Macy's, LB, Limited Brands does the Victoria's Secret stuff. I think they have other stuff they do as well. But we're seeing all the retail names sitting on
Bed Bath & Beyond.
BBBY. What's going on with brick and mortar retail besides the obvious, Noah? Their fundamentals are rotating out and the trends are just down?
Well, I think the obvious is what's really going on there. You're still seeing weak performance because people have changed their habits. What were once classic brands, they failed to innovate. Like LB has got a pretty good breakdown pattern there. Along with a lot of
my favorite shortable stock.
You should short that, and then
I've been shorting it for years.
Yeah, you could turn around and take the money you make on and go buy stuff online with it. Like everybody else is doing these days. So, yeah, no, that's a good looking descending trend. If I'm picking short sells, I want to find areas where the market is weak, and the brick and mortar is that area, with the exception of the big box stores that sell it all. It's the specialty retailers that struggle.
There's some interesting action in the drug makers today, and it's a reminder that you have extra volatility in these kind of companies. Bring up Bristol Myers, BMY, one of the bigger ones in drug manufacturers, and manufacturers, I should say. And there was a rejection from a court over a patent challenge of one of Celgene's drugs, not Bristol Myers. Bristol Myers, it ends up putting into question some of the other deals that they have in place. And now it's breaking down here today about 3%, Noah. Drug stocks are always fascinating. There's an argument for going long equity, in certain situations. When it comes to biotech type companies, I'm always long options when I do play them. I don't have any plays on this one right here, but then I can control the risk through a debit spread and whatnot. That chart is not good now. I mean, it was moving up. It was showing some strength. Now we're breaking down on relatively high volume. What's your read?
Wow, I think your read is exactly what I'm seeing there. It is breaking through that 50-period moving average, giving you a larger body candle. You're seeing an increase in volume, and that's usually a good sign to me of selling sentiment. If I see a breakdown coupled with above average volume, that's a good sign that you're seeing selling pressure that might follow through. There's some support down there at 48, which would be, I think, a first target for profit takers. But if it can clear 48, I think you got a clean drop down to that 44 ballpark.
Got to bring up a stock that we talk about quite often, Take-Two Interactive, one of the gaming stocks. We bring them up all the time. And I tell you, I saw the move yesterday and I dug into it further. I didn't see the headline when we were in the halftime report. There's a rumor that they're an acquisition target by Sony. Whenever I start seeing that, I really get skeptical. I've been burned in my career as a trader when something, either an M&A deal does happen or doesn't happen. I got to tell you, and I loved trading this stock the last 6 months. For me personally, I'm thinking about putting it off the watch list for now,
Well, yeah, especially when it comes to a merger or an acquisition, because that, understanding what happens on an acquisition when the stock you own gets absorbed into another company, you don't really have all the details on that. And the rumor of it, I think, is a good enough reason to avoid it.
Yeah. Yeah, I agree. Dow Jones Industrial, if we would, let's keep working through the markets and welcome out Halftime Crew. We have so much fun on the Halftime Report, and I'm very proud of what we're doing here. If you guys come here every day and hang out with us in the chat, just put in hashtag HTC or Halftime Crew. And remember, the hashtag we use on all our social media for tackle trading is Team Tackle, and we're going to try to make that thing stick and make it run. I love the idea because that's really what we are as a team here. Dow Jones Industrial, obviously, we're talking about the major 30 companies. We're up here pressing the high, Noah. It's moving into more of a neutrality position for me, and we've got support and resistance clearly defined. We are moving sideways somewhat here, but so much of that is Boeing. First read the YM, then move on to Boeing. We're going to have to talk about Boeing every day until this thing settles out. So talk about YM first.
Okay, YM first. I think the daily chart's pretty self-explanatory. You've got the same high that the rest of the broad market does. It's a resistance zone. You had the correction. It hasn't had as much of energy in the recovery, and obviously, but probably been weighed down by Boeing. But if you change this intraday, Tim, it's got a kiss goodbye setup. And you can see it here on the daily chart if you look closely. You can see and this is probably, I'm assuming, why you moved to neutral. You see the double top right there, the breakdown below support, and the rally back up into that same support resistance zone. Yeah. So when you drop down to the intraday time frame down there, let me get it. We'll go 10 days, 30 minutes there. There's the support breakdown right there, and there's that same zone. It's really struggling to get back up above there. Yeah. And if it starts breaking down, it'll start triggering some sell orders. But if it manages to break through, fine. But with only 30 components on the Dow, Boeing could pull it down.
Absolutely could. And, these are big companies. And I know many traders who only just trade Dow companies. You can trade the big liquid companies in a market. I like what we do here. Obviously, we scan the whole market and whatnot. But I'm seeing so many neutral stocks. Pfizer is neutral. PFE, it's down 1.4% today. Walmart is neutral, down 0.94% today. Now, I was excited about a Walmart breakout above 100, but it just has failed to do it. You have to trade what you see.
It's been disappointing me for 2 weeks now. You can see my target order out there just waiting. Yeah. This thing is not taking off. It's boring me to death. So it might be time to bid.
And by the way, if it breaks 100, it's a buy. I'm not saying neutral means you can't be watching it and ready to pounce, but we're seeing neutral action out of some of the bigger names on the Dow. And then even McDonald's neutral, Caterpillar's neutral. We're going to be talking about Caterpillar later when we do an Iron Condor. There are ways to make money on neutral. Don't get me wrong, but you have to assess it and make a decision on what your opinion is. But we got to talk Boeing again, Noah. I'm interested in the doji today, and I'm being open-minded and thinking about this whole thing. I still don't know what the fallout's going to be. I'm not going to buy this and hold it outside of a day trade until I make a better assessment of that risk and what that is. But quite frankly, the doji is encouraging if you're a trader because that's normalization of the price. What's your read on this thing?
Well, just that. I see from the daily chart, this is one of my many skills, Tim, is I can see patterns on the smaller time frame from the larger time frame. You got a big drop and that inside consolidation to the doji, that's a bear pennant. So when you break that down into the intraday chart, there it is. It's a big drop and it's forming that consolidation. This to me, that consolidation pattern, I think indicates uncertainty. People not willing to really run out and buy and sell because they're tentative. They're waiting for more information. What did I see today? That they've taken the black boxes, they found those and they're running them up to France, I believe, for because there's some concern that the U.S. might be biased on that. So they're going to analyze that and see what the causes were. I know that they were slow to ground the planes here in the U.S., which they did do. So I think that it is just a watch and see, but that consolidation pattern intraday, that little pinch down in there, with the right news, positive or negative, could be a reason to trade that. You could take that from it, but I think you need the news, you need the catalyst to help, because otherwise I don't know if I would want to do anything other than a short-term day trade either.
Yeah.
Because it's just consolidating and there's a big support zone down there and the price has been discounted. But if it turns out that there is a significant problem that might slow down sales on that, I think that would affect their bottom line.
Very well could. I mean, that's where my head's at. I'm still trying to process it. You don't need to make a decision every day, on everything. Obviously, you have limited time, limited capital, and you just have to trade what you see. And we like clear patterns. We don't like confusion. We don't like uncertainty. We have enough of it even when we have a very, very clear chart and a very clear pattern. I'm going to wait for it. We'll see what happens as it develops. Let's move on to the NASDAQ, if you would. NQ contract. NASDAQ 100 fading higher. Kind of feels like a profit-taking day on some of these big names here, Noah. A little doji at the top. What's your read?
Well, you got that good momentum rising up off the breakout. And then today's an inside candle, which I think is your profit taking and some tentativeness there. Inside, it's, you see there's also a possible double top there where the two candle highs are about the same price. So if you drop that intraday, you'll see the same slowdown. There it is, double top right there. And that little, M converter could lead to profit taking, but it's still in the context of an uptrend. So if you do see some selling pressure, I wouldn't be surprised if buyers were stepping up again in the old support resistance zone.
Let's go through the FANG stocks rapid fire style. We obviously talked about Facebook and Apple already, but Amazon, let's bring up next. I've been cautious neutral about this. In fact, I've been questioning whether or not this thing's going to make a move at some point, one way or the other, even looking for a downside move potentially, but it is now up at resistance again here, Noah. Earnings are until mid-April. NASDAQ's at a high. I mean, if one company could break and run, I guess it could be Amazon playing catch up if you're trying to, be open-minded about what that company's chart looks like. What do you read here?
Well, that 200 period moving average is looming over it. And you can see where that's been a decision point in the past for selling.
Mm-hmm.
So I think if we do get a run up into that resistance zone, it's going to have to contend with the known resistance plus that 200 period moving average. I don't think I'd have a real bullish sentiment on it until it cleared that. I would want to see a close above the 200. In the meantime, it's just chopping sideways, so I'd maintain a neutral bias.
Bring up Snap. We haven't looked at this chart in a long time. We had a midday upgrade, which is not always common. Usually these analysts will come out in the morning or in the evening so that the market can price it in. A little bit of a run here and just breaking out. Snapchat, I don't have a Snapchat account. In fact, maybe I should, so I can go and make sure that my kids are not on Snapchat. That whole interface.
Kids are probably definitely on Snapchat.
Is it? What is it about Snapchat? What do people like about it?
I don't know.
Cody?
I'm an old man. I don't know these things.
So actually, I'm not a huge user of Snapchat. I know that a lot of people do use it. Basically, they're quick pictures and videos that you take, and then they're gone 24 hours later. It's really just like, I don't know, people are, rather than having to make a full post on Facebook or Instagram or anything like that, it's literally like you just take the picture, it's on your profile, people can see it, and it's done. So it's kind of like a social media way of keeping up that you don't have to maintain very often.
Can't you do that on Instagram and Facebook through stories?
Yes, and that story is Facebook and Instagram trying to be Snapchat. They count the story after Snapchat. But yes, it's the same thing.
I haven't bought this stock in forever. I can't even remember the last time I traded it. It's been off my watch list for so long, Noah. But I got to tell you, as a trader, I've seen these IPO patterns before where they IPO and they fail and they sell off for 3 to 6 or 9 months as people who had money in pre-IPO are taking profits.
Mm-hmm.
They eventually develop a bottoming pattern and then can develop into a trend. Is that happening here on Snapchat? I mean, the validity
maybe, but I don't know why this, and I haven't really read anything on this recently, but I always thought of Snapchat as just as a company set up for acquisition by one of the bigger fish. If that, they've already had plenty of talks about them buying them out, and at some point in time, I imagine it'd be probably cheaper to buy them than it would be to try to mimic them. It's a good pattern from a technical perspective, but I don't know that I like the fundamentals on the company to begin with. Plus, I would be worried about acquisition on it. So for me, options only. I wouldn't own the stock.
Well, and it's not a short-term watch for me. I do keep a long-term watch for a reason. When I see interesting action, but maybe I don't want to buy it then, or I can't even map out it in my head where I would buy it in the short term, I'll just kick it on a long-term watch and check it on the weekends until something develops and comes back. It caught my eye there. Relative volume was up. Obviously, it's up big here today. A gap out like that, you have to take note. Very interesting. Facebook, Apple, Amazon, Netflix. Bring up Netflix next. Let's keep talking NASDAQ stocks here. Neutral, waiting for a breakout.
Yep. Overhead resistance out there at 380, quite a bit of it. And so it's, retesting, and I think it will get up there and retest that soon enough. But it's been pretty quiet. It looks a lot like the rest of the FANG stocks pattern wise. They're all kind of in that sideways consolidation, lagging behind the rest of the NASDAQ. So.
Mm-hmm. And one of the reasons, and we're going to do Microsoft and Google, while I feel like the tech sector might be at a point where it's profit taking for swing and day traders. If you look at Microsoft and Google, they were set up so beautifully last week. They pulled back, they pivoted, they were on our watch list, they were on our option report. Guys, if you're out there and you're a tackle trading member, obviously you know about Microsoft. It was on the option report last Friday. It just feels like it's run. What was our first target on this one, Cody? Do you remember?
Let me look that up really quickly.
Look that up while we talk about it. Noah, candlestick relationships, and you are like Neo from the Matrix. You see all things. Those candlesticks are losing momentum.
They are. They're slowing down. And just think about the psychology behind this on that nice little pullback. Everybody who saw the scouting report, they bought and they were ecstatic on Monday. Feeling pretty good on Tuesday. On Wednesday, they're feeling pretty good, but they're starting to worry because it's slowing down. And here they are on Thursday going, you know what? Tomorrow's Friday. I should sell.
Mm-hmm.
And it's slowing
Our first target was 113. Our second target was 116, which was the old all-time high.
This makes it very difficult, okay? Because when you've already reached your first target, either you scaled off there or you trailed stop. Now you're moving towards 116, and I guess it comes down to rules and subjectivity and some of those rules as well. Noah, would you be maintaining your current plan as you're moving through Thursday on a small candle like this and seeing what happens tomorrow?
If I'm a swing trader, I am trailing stops behind those candles because it's starting to increase probability of a revision back to the mean. Doesn't mean it won't hit 116 first, but people, when they see the candle start to shrink and slow down like that, I think they instinctively start to tighten up the stop losses. And so you get a accumulation of a lot of stop losses right below the candle low.
Mm-hmm.
And if it hits a tipping point, you can watch it intraday. It'll take out the support, and you'll see it really calm. And it'll once it clears the support zone, it drops pretty suddenly, and it only drops for a short day, a day or two while it clears out the stops. But it's slowing down. Doesn't mean it can't go higher. But, looking at that chart pattern from the daily perspective, as a swing trader, I'm tightening up stops below at least the previous candle low. If you're really trying to lock in gains, you're going to be up below today's candle low. And if you're a position trader, you're probably hoping that it drops back just a little bit and runs up, and you're not going to do more than bring your stops up to break even.
Somebody put this in the chat. Let your profits run, cut your losses short. That's from the great Jesse Livermore back in the day. Trading Mindset 101. Be very patient when a trade is working. You had a predefined plan. I love what Adam said. I love what you said here, Noah. You tighten up that plan, but you don't have to overthink a profitable trade that's running in the direction of your second target. That's a good good problem to have. And welcome out Dustin and welcome out Jasmine. We're going to get to gold here in a minute as well. I thought it was a great read by Noah on gold. We'll get to that here just a minute. And Google, Microsoft all kind of look at the same. Google actually almost looks identical to Microsoft. They've been running together here recently. A lot of action in the markets every day. Even on a doji day, there's a lot of action in the markets, by the way. It's the nature of the markets. Go on to the RTY if you would, Noah. Let's talk small caps real quick. And we had a wonderful mastermind group last night with Coach Tyler. And, you know, I'll tell you that May contract, there's different deltas that you can play it on. If you are a part of the Cash Flow Condors team, go watch the replay from the mastermind group and listen to Coach Tyler. He did an incredible job talking about how to approach May and how to build those contracts and how to use your rules and all that kind of stuff. I'm seeing relative weakness in small caps. I don't know if that's going to hold, but that's relatively weak. Same as the Dow, right?
Same thing. It's got that double top pattern. It's got the kiss goodbye setup. It's below that 20-period moving average, and it's slowing down. It looks to me like a kiss goodbye setup. Again, take that down intraday. You'll see the exact same. There it is. There's your double top. There's the kiss goodbye. Doesn't mean it's going to drop, but it definitely makes me more neutral than the other major market indexes.
Yeah, me too. 1600s support or resistance. 15, what is that? Where would you put support there? What is that pivot? 1520?
1520, yep.
Stay in the middle there. You like the neutrality if you're in a condor type situation. I think you've got another support level back there from the November timeframe that I'd be watching as well. 1600 though is significant for me. If it broke above that on any kind of volume, that means the market is moving bullish. Until then, though, I've kind of moving down to a more neutral call on the RTY. You know, it was bullish there for a bit. We're V-shaping in here on the very, very short-term time frame. It's going to be an interesting. Move on to the dollar, if you would. And Cody, I want you to come on in here. I know that you did some work on the prep on the Brexit deal, and Noah and I, we track that stuff all the time. And Cody, you trade a lot of Forex. What's going on with the currency markets right now? Brexit, they couldn't get a deal done. You know, Theresa May's proposal did not get passed. And now here we are in limbo. Cody, what's your interpretation of the dollar right now?
The dollar is similar to what I had said yesterday. I see it just kind of pulling back. It is in that neutral range that it's been in for quite a while. Today with the green candle, I still want to actually see it. Unfortunately, I kind of hate when at the end of the week is when things start triggering or moving. So we have the day today that's slowing down, green candle. I would look for an update tomorrow to confirm that it is, confirming that retracement. I'm bullish on the dollar. I'm not even touching the British pound because of the Brexit stuff going on. Who knows what's going to go on with that thing? As far as whether the British pound is affecting the euro as much, I don't think it is. I think the eurozone is going to continue on regardless. But also the currency market, the Japanese yen, they're supposed to announce their rates sometime today, and they don't have an exact time. Theirs just says tentative. So keep an eye out for that if you trade the Japanese U.S. cross pair.
Mm-hmm. Bring up the euro dollar cross pair, Noah. EUR USD. Is that not just purty?
Oh, it's very pretty.
It is.
I mean, look at the candle relationships and the purity of the pattern here. You had a breakdown. You had a bear retracement. Green candle, green candle, green candle, green candle, red candle. We've not confirmed yet. I got to tell you, I mean, that is setting up. It's not confirmed yet, but that is setting up as a very beautiful downward channeling pattern in a very cautious market right now. Dollar bullish, euro bearish. It all makes sense to me. No, currency is not for everybody. Forex is not for everybody. There's no doubt about it. But it is a wonderful market if you know how to trade it. What's your approach to Forex in general?
Well, I mean, Forex is highly technical. So everything you learn about trading and technical analysis and master trader type stuff, it all applies really, really well to foreign currencies. The key is I think you use your daily charts for context. You place your trades down on small time frames like 15-minute charts. And then you have to understand the position sizing is what it comes down to, because you're dealing with, the decimal points there. You get, 4 digits from the decimal point out there in the 1/100th of a penny. And you have to start to understand how the minimum fluctuations in price work, called pips, and how the position sizing is affected by that minimum fluctuation in price, so that you can give the right risk tolerance. Because the leverage in currencies is huge, Tim. It's 2-to-1 in the US, or excuse me, 50 to
50 to 1.
That's what I meant to say. 2% is what I meant, those two. So 2% or 50 to 1. And that gives you that's enough rope to do some, damage. You could hang yourself with it if you're not careful. So you want to make sure you learn how to position size appropriately, start small and build your way into it. Currency is not rocket science. It's really just technical analysis and applying classic technical disciplines to, entry and exits.
And also, just to add to that, something else that most new traders don't realize when they try to get right into it is the bid-ask spread on foreign currencies. You have to take the opposite side of whatever you're doing. So if you're going long on it, you have to take it. So any position you're in, you start off at a loss just because you can't take the mid price and be right in the middle. You either have to buy the ask or sell the bid.
Who do you trade Forex with, Cody?
I go through a Wanda and MetaTrader 4.
The bid-ask spreads, the way that you get fills and all that, the pip distances, there are no commissions with many Forex brokers. And so
no, I don't have commissions.
The way they make their money, Cody, is they actually open that spread by an extra little tiny bit, pip, and then they take that pip as a way to pay for themselves and all that kind of stuff. The Forex brokers, it's an interesting market. There's no doubt about it. That euro-dollar cross pair looks good. Whoever's doing the Forex report this weekend, I'm sure we'll be talking about these setups as the dollar pullback continues. Let's move on to the commodity market. Talk crude oil first. Crude oil broke out, whether you buy it or not. I mean, it did break out. The CO contract broke above 58 and it started to move. Here we are moving throughout the week and showing some strength here, Noah. What's the first target if you're long crude here? 62? I mean,
I'd say 60.
60.
Just fat number. 62 will come in to coincide with the 200 period moving average. So that's a good extended target. But yeah,
technical confluency.
The confluence. I was waiting for that word. So it crossed my mind and I was hoping you remembered that. Of course you did. Fancy words like, sound all cool. You can be, no, 60 is my first target. 62 is my second target.
What is the airspeed velocity of an unladen swallow? It's technical confluence.
I don't know.
We're on a Monty Python kick here today. Apologies for hurting your eardrums there. I do. Oh, what a breakout. Crude light.
On the nights who say nee. Nee.
I swear I'm just going to binge watch.
If y'all haven't watched it, every one of you, your homework is to go watch Monty Python and Holy Grail on Netflix after the halftime report. That's your homework.
I want to see a stop loss meme with merely a flesh wound.
All right, I did them C'est La Vie with him no arms.
The Black Knight. Oh man, that show is so great. First of all, it's my favorite Monty Python. It may not even be the best Monty Python, by the way. There's so many good ones. Anyway, back to markets here. Crude oil breaking out, 60 first target, 62 probably second target. It's got some concern, I think, in the fact that we're heading into the weekend now. Obviously, you just broke out. You're not carrying through on strong momentum. If you missed the breakout yesterday, you got to apply your rules. You got to know your own rules, obviously. Let's move on to gold and let's talk metals. Noah, you absolutely crushed this call and this analysis on gold yesterday. A lot of people would have been pulled into the backwards breakout above 1,300, but you nailed it, 1,310. And everybody in the chat say, great job, Noah, because you really, really did a good job on this one. Break this chart down if you would.
Well, like we were talking about yesterday, that big sell-off is what made me feel more bearish on that rally than bullish. And at that big support resistance zone we were talking about, we had a confluence, was the magic word, right? Of moving averages, support resistance zone. And when you broke that down intraday, look at that. It almost pivoted on the woo. I really did nail that, Tim. That is pretty awesome.
You crushed it. No.
Here's the sad part. I didn't trade it.
Got busy.
C'est la vie.
There you go. Obviously, dollar and metals relationships are going to work together, and some of that Brexit fallout is going to impact metals as well, perceived risk and all that kind of stuff. As the market stabilizes, gold maybe is going to have a little bit less of a fear push. I still like the fundamentals. I don't like the technicals. I'm not even going to mince words on that. I think it's moving into a neutral technical condition.
Yep, it needs another drop, and you want to see a slowing momentum pattern. But I can see it even retesting that 200, coming all the way down.
I'll tell you what is not neutral is palladium. Give me /PA if you would. And I don't know how many times I got to talk about palladium until people start paying attention. It is literally pressing a high here again on a high compression pattern, high base type scenario. Noah, what exactly would you call that pattern? Is that a high base?
High base bull flag, you could call it. You got a nice strong run up and that little pull back down. People will call that a flag, or it's just a high base stock in a box. It's up highway and it's just looking for a break above resistance.
Mm-hmm. Yeah. I love the fundamentals, the technicals. I love the condition. I like the fact that you're getting exposure in metals. PALL, it doesn't have good options is the only issue. And so really when you're looking at something like this, and go to the option chain real quick, you run into some tough situations when you try to trade commodities through ETFs if you can't afford the capital. No options. Okay.
None.
Yep. So you can't trade it. You got to trade the equity. So either you pay for the 145 a share on a breakout or you don't, right? And I know that can restrict some people's exposure to palladium. Futures market, ETF market, they both can be in play. I love that industrial metal, Noah. There's no doubt about it. We will get to the condors here shortly. Last one I want to talk about, though, in the commodity market. Oh, none, actually. Let's talk condors, Cody. I think we're good. Today, Theta Thursday. One thing we try to do, and I'm long-winded and talk too much, and I got 8,000 charts that I look at every day. So believe me, the hour goes fast. But we do like to have...
Looks like you a little bit.
Yeah. Hey, buddy, I'm telling you, I know what I'm doing. Here's the thing. We try to have a theme every day. Monday, we do sector prep. Tuesday, we do Delta. Wednesday, we have a guest. Thursday, we do Theta Thursday, even though Mark hates the alliteration in the name. Mark's not a very happy person all the time. We got to cheer that dude up, everybody out there. Next time you see Mark, give him a hug, give him a high five or something. But Theta is so important for many cash flow traders. And one of the best strategies, Noah, is the iron condor. And we were going to build a bunch of them out and kind of show them in the spreadsheet. Cody, do you have that spreadsheet ready?
I have the website pulled up so I can show everyone where to get the spreadsheet.
Okay, you need to share your screen. I stopped sharing mine. So,
alrighty. All right, my screen is up, guys. So when you log in, so what you're seeing, we want to go over here to the Trade Center and let it load. So for our pro members out there, y'all have this extra little choice over here that says Trade Journals. You're not a pro member? Got to become a pro member for that to pop up. We're going to click on the Trade Journals.
I love these journals. And by the way, if you've not downloaded all three of them, go get them.
Absolutely.
A lot of traders only download the one. And if you have an old trade journal from like a gold key from a year ago, you got to get the new one. There's a new tab on there for position sizing. So I would definitely go and download the new journal as well.
All right. So yeah, we have the trade journal, the Theta Research, and the portfolio journal. So today I'm just going to grab the Theta Research. All right. Open this guy up right there.
Mm-hmm.
Your mouse clicks really loud there, Tim.
Sorry. As you're Theta researching and spreadsheeting, I'm looking through the option report for more trades. So, yeah, it's called multitasking, Cody. I'm sure
one of those 8 million charts.
Yeah. Well, watch list, pick list, then scan, right? I mean, there's a reason why we bird dog those lists every weekend.
Absolutely.
It makes everybody's life a lot easier.
Alrighty, so we're going to be doing some iron condors. So I'm going to come down here to the iron condor tab.
Now on your screen, Cody, you might have this on a second screen, but I don't see the Theta spreadsheet.
Oh, do you? That's not good. How about now?
There it is.
Yes.
Beautiful. Now, by the way, we've done a lot of training on this and we've used this before, so we're not going to go through and train the basics here. All we're going to do is build one out and talk about it. Okay. So Cody, what stocks did you pick for condors?
So I thought we were going to do Amazon.
I thought it was qualified. I don't know if it's pressing resistance. It's neutral right now. You could qualify Amazon. We could easily do that. Yep. And then Noah, you had one, Caterpillar. Was that it?
Yeah, I thought Cat had a reasonable sideways channel and I didn't have a lot of bullish aspirations for it.
Yep. I do like both of those. So Cody, put in Amazon and Cat.
So I have no idea why, but it is not typing in the spreadsheet. It's the strangest thing.
Yeah, give me the screen.
Yep. I'm pass it off to you.
Yeah, you read the numbers out to me. Now, what I always do, by the way, guys, when I'm doing spreadsheets, let me know if you can see that.
Yep.
Okay. I use this tool all the time, especially in mentorship. In fact, one of the exercises I do with my students is I'll have them go out and find 5 or 10 different candidates and build them into bull, bear, and neutral, and then research a bunch of different stocks. So we take like Cat and Amazon, and maybe you find a bunch of other companies as well. You run it against the RUT and the DIA, so on and so forth. I'm a huge believer that you need to research 4 or 5 candidates before you make a choice on one trade. You don't just pick Amazon, go trade Amazon. You want to compare the different numbers. Now, we're not going to run all 4 of these. We're going to run like one of them and talk about how to do that. Cody, give me the price of, let's just do this step at a time. You find the data. I'll fill it in the spreadsheet, then we'll talk about it, okay?
Will do.
Give me the price of Caterpillar.
Price of Caterpillar. All right. Caterpillar is currently trading at 133.51.
Okay. ATR?
The ATR on that is it's about 210.
2.1. And the month?
April. We're going to go 35 days out.
35 DTE. DTE stands for days till expiration. Now, your call strikes, and by the way, all your rules are going to be kind of built down in here with some guidelines on how you can use this and whatnot. Your call strike, what strike do we want to build?
Let's see. Are we going 10% out? 10 delta?
Yeah, less than 15 is what you want. So anything lower than 15 on the call and put side would be fine.
Let's do the 50 strike, or 150, excuse me.
Okay.
By 155. And then on the put side, we're going to do 120 by 115.
Okay. And then the call delta?
The call delta is 10 and the put delta is 9.
And if we build that out, what's our net credit?
All right, let me see here. Let's build that out, shall we?
I believe in deductive processes.
It is 31 cents on Caterpillar.
You know, as I go through my process on a daily basis, I always check the news, do my market analysis, manage my current trades, and then go out and try to find a new trade. I don't go out and try to put new money to work before I'm going through my checklist. And I believe in checklist, you know, and on a daily basis, I'll start with an idea. Noah, a pretty common sense idea today would be the market's dojoing. Let's go find a theta strategy, right?
Yep.
And then I build a list of candidates. How many depends on how much time I have and which ones I want to do. They got to be liquid, available with options. For condors, they've got to have all those different components. Then I'll research numbers, evaluate their characteristics. And remember, I talk about the 3 C's, chart, cushion, credit. It has to be a neutral chart or I'm not going to do a neutral strategy. It has to have good cushion with the ATR buffer or I'm not going to feel comfortable. And then the credit still has to work. Many new traders make mistakes on this where they look at the money first and they chase the ROIs. And Noah, we've seen this many times. We'll go through the numbers and sometimes the spreadsheet will flash it green, making you think, okay, there's so much more money in that one. I got to go do it. It doesn't make it a better trade necessarily.
Yep.
Yeah. And then we'll make a decision. Okay. Kind of go through a decision-making process. And Decision. Oh, I'm glad there's not a spelling contest today. I know that's wrong, but I'm not going to try to correct it. What was the net credit on Caterpillar?
31 cents.
And the BPE on a 5-point window is 4.69. Okay. So you got a 6% ROI, 60% ROID. It's fine. It's okay. It's not great. Let's run the numbers on Amazon.
All right. Amazon is currently trading at $16.95. And we'll do the similar days till expiration. And we're going to be selling go quite a ways out on that one. I need to add some strikes.
Noah, give me the ATR while we wait for Cody to get the strikes.
You bet. ATR on Amazon is $30.
And we're going to do the April there as well, 35 DTE.
All right, I'm still going to go 10 out because we went 10 out on Caterpillar. So I'm going to sell the 1855. Now, with Amazon being a larger company, do we want to do a 10-point spread or a 5 still?
Yeah, I would go to 10.
All right, so then we're going to sell, or we're going to buy the 1865 behind that.
Oh, that's not.
And then on the put side.
What was the delta on the 1855 strike?
10.
Okay.
And then we're going to, on the put side, we're going to sell the 1530 and buy the 1520.
And 10 delta?
10 delta. And we're getting $1.45 on that.
Now, being a 10-point window, the margin, the buying power effect they hold is a little bit higher. So it's going to be 8.55 against 10, 17% ROI, but you have less cushion. See, Caterpillar has a better buffer for less money, but you're more likely to make the money because you have more cushion. Okay. Yep. Amazon makes more money, but you also have more risk because it's a higher beta and higher volatility company. If you're brand new and this all confused you, just don't do anything with it. There's plenty of other things you can start working on. If you're a new trader and you're working on buying and selling stock, focus on that. If you're a theta trader and you use the option research spreadsheet, or if you're up for a challenge, I have a challenge for you today. I want you to download the spreadsheet and fill out the data for 3 to 5 companies. Take a screenshot and put it on Twitter and tag me at Tim Justice Utah, or put it in the clubhouse and tag me and Noah at Tim and at Noah. We're both on Twitter. We're both on the clubhouse. So is Cody. Cody, might as well include you in the party here.
Yeah, see Mackie 14.
That's right. If you guys are down for this, I want you to use this tool because I know my veterans, okay? And I ask and talk to my veterans all the time. Halftime crew veterans, this is a big and most important tool for them when they're evaluating credit spreads and their cash flow theta. This is just how we use it. You know, how you find the candidates, how you build it. You got to know your iron condor rules. C'est la vie. All right. Noah, there's not enough time in the day. Or maybe there's the perfect amount of time in the day to go and finish watching my Monty Python show. And Marie, you can judge me all you want. Scott will agree with me. I'm with him.
Well, yeah. I believe girls don't have to like Monty Python as the rule.
Yeah.
But most guys do.
Oh God, I'm seriously. I'm going to go finish that. Great job, Cody. Great job, Noah. Great job, team. Have a wonderful, wonderful day. We'll see you back here on Friday for a Friday Fun Day. Peace.